Hello traders, my name is Horvat and welcome to a new video analysis in which I will take a look on the dollar index, euro dollar, then also cable, AUD dollar and gold. So firstly on euro dollar, what we are looking here is an ongoing decline from 2008 highs. It looks like we have more weakness ahead of us towards parity level, which means for €1 you will get $1. So I would not be surprised to see this level tested maybe even by the end of the year, since we have this ongoing price action for the last 15 more months or so. It's very slow actually, so to me it looks corrective with an ongoing downtrend. Now let's focus on the personality of the price action always when we are predicting the direction. Okay, so impulses are very strong, corrections are very slow, and we can see that here from 2014 highs a decline was extremely strong, so that was clearly an impulsive reaction, and I want to stay with this trend until I see 5 waves down. Okay, so here to me is not a strong move, it's just a sideways price action. So based on personality, I think it's a correction that will take euro dollar even lower. So that's our monthly chart. On a daily chart, we were talking about this triangle for a while. We said that upside can be limited here over the last few months back, because not months, weeks, because this rally from December lows to these highs of May was made by 7 legs, and this is the number of a corrective structure. Okay, it was ABC, so first 3-wave move, it was a zigzag, then you have a wave X which connects the second zigzag, so it was a correction, and I was quite confident that this upward move will be temporary because of overlapping waves, obviously. Okay, so because price did not reach this high from August of 2015, I think there is strong possibilities that this is a big ongoing downtrend. Ongoing triangle within ongoing downtrend. So the next also probable count would be that this black wave 4 already completed its structure here, and that we are now in a first wave of a new 5 waves of decline in big wave 5. But even if we focus on this triangle or bearish impulse, in either case you should see more weakness after a bounce here up in wave B, or maybe even a wave 2, and then expect a wave C drop or wave 3 drop. In either case, I think that we are going lower for the next few weeks, probably even back to these wave X levels. Okay, that would be my minimum downward projection. And the reason why I'm bearish is obviously here on the 4-hour chart, which I can count already 5 waves to the downside. Wave 1, 2, extended wave 3, wave 4, and wave 5. We are approaching this 161.8%, which is a very interesting level. So I would not be surprised to see some bounce here, but only for short-term recovery, maybe back to these resistance levels. Okay, this swing low from end of April, then you have this recent termination point of a corrective wave 4. Now I also am tracking another count here, just a second, which is slightly different. I'll show you real quick. Okay. So here is basically, it's for the short term is the same scenario. It just shows that we are still going much lower before first 5 waves will complete this red wave A. Okay, so here's actually the idea that this black wave 3, which is here, okay, from here is going to be much more extended, like I showed you on a previous chart. Okay, so here it's actually suggests that we will continue lower into wave 3 after a corrective bounce. But what I really like about both wave counts, that no matter on which wave count you're focusing on, the resistance is the same. Okay, here wave 4, as you know, will usually retrace back into the area of a former wave 4 of one lesser degree, and then turn to the down, and then market will continue in his primary direction, which is down. Okay, so you would expect ABC bounce and then continuation to the downside into 5th wave. Here, as you know, second waves or B waves will also tend to retrace back to the area of a former wave 4 once an impulsive reaction is completed. So once again, here is ideal resistance area then for this red wave B. So all in all, I think that this euro dollar has room for further weakness here, and that this decline is part of a larger minimum free wave drop. As I said, ideally it's a wave D, but can also be maybe a new bearish impulsive cycle underway to new lows. Okay, in euro dollar we are obviously bearish. On dollar index we are bullish then, and as you know, we were tracking this bullish count for a while. Now here's our monthly chart. So I'll remove this. So what we are looking here is that actually market still did not accomplish this 5-wave rally up in wave C. As you know, if you're tracking an ABC structure, you need to have 5 waves in wave A and 5 waves in wave C. Okay. In our case, you can see that this was strong impulsive reaction from 2008 lows, so clearly this was first impulse. So back then I was quite confident that market should continue higher with 3 waves, okay, because that's, if market turned, then you need minimum 3 waves in this direction. So here was our second wave, labeled as wave B, and now obviously we are in a wave C. Yes, this wave C is going to be extended wave, but even if we would label this as a red wave 3, maybe, you would still expect the same scenario for the next few months, which means you would be looking for more upside, since this leg up from red wave belows should be made by 5 waves. So this was the first wave, then you got the second wave, and then you have a very strong move, which is very typical for wave 3 within ongoing impulsive structure. So this was a strong move followed by a very slow pullback that was made by 3 waves. Okay, also notice that this pullback found a support recently at 38.2%, which is a very common fib level for identifying end of 4th waves. Then you have this support from former swing highs here, wave 4 of a bearish trend back in 2005. Then you have this swing high that reacted also as a support in 2008 in November, and you can see a nice turn to the upside. What I really like also here is this candlestick formation. If we go to this chart, you can see that we have seen a new low here this month, and now we are trading higher towards the end of the month. So if market will be able to close this month above the previous open, which was around, let's say, 94.50 or so, then I would be really even more confident that we are headed higher, okay, because Elliott wave count already suggests, and direction of the trend, obviously I want to stay with bullish dollar view, suggests that dollar is going higher, okay, and if this will be confirmed by candlesticks, then this will just increase my confidence. If we go down to the daily chart, here is a complex wave count within wave 4, but actually I'm trying to keep it as simple as possible. It's still labeled by 3 waves. So here was a flat, actually 3 waves down for wave B, wave A, then you have 3 waves up for a wave B, and then I label this overlapping decline as ending diagonal. Okay, notice that market also bounced from this after this spike to a new low, okay, through 92.50. So obviously there were a lot of stops beneath this level, and those important levels usually leads to very strong turning point. So actually I'm not surprised to see a reversal here with a spike, also bounced from a trend line, and now you can see that we are already at the upper side of this trend line, which is already actually taken out. So because this rally is also impulsive, I think that we are going to see much higher levels here on dollar index, which suggests that we will see more weakness on other currencies. Okay, so if we take a look on cable, this one is obviously on different direction at the moment. because of a lot of noise around Brexit probably. So here, if we review the monthly chart, I'm still looking down for wave C, that is part of this big free wave drop. Okay, I will continue to look to the downside, because on the daily chart, here it was my start of wave C here. Okay, from that high, we still do not see 5 waves of decline. This was wave 1. Then you have very nice textbook example of an extended wave 3. So if this was very strong extended wave 3, then you know that we will see wave 4 pullback. And also, so far, this recovery is overlapping. So I think that this can be a WXY. It can be a wave 4, which remains valid as long as the market is trading beneath this invalidation level. Okay, so I will continue to look down, because this bearish pattern in 5 waves is not completed yet. And second thing is, this is an overlapping recovery and we are still beneath invalidation level. So I really do not see any reason why we should turn bullish here already now. Okay, what I think that it may happen here based on this for our chart is that we could see a move to a new high here, which means break above 1.47670 and then maybe a turn to the downside. Okay, so maybe this market will form some kind of ending diagonal here. Let's assume this is wave 1, wave 2, wave 3, wave 4 and wave 5. Okay, so maybe we will have here an ending diagonal that will take us to higher levels for now, but I see limited upside. Let's say around first resistance is actually already here at 61.8% taken of this wave A, measured from end of wave B, but I'm looking more towards this 149 level or maybe 148.50. Okay, so if we will have 5 waves up when we reach these levels in wave C, then obviously I will once again try to turn bearish on this market. Here on the daily chart, what I also see is that market is approaching this important 200 moving average that could also react as a resistance. So if we do not make any significant break and daily close above this level, then maybe spike could be possible and then again turn or continuation to the downside, because clearly, as you can see, this is ongoing recovery that appears to be corrective, okay, not impulsive. Okay, so that's for pound. Now let's take a look also, we said Aussie dollar. On Aussie dollar, as you can see, market is turning nicely down as predicted. We were looking for this recent recovery from end of September as a flat correction. It was quite a tough call, but still the reason why we stick with the bearish view was obviously direction of a trend. We have lower lows and lower swing highs. In fact, this was a very strong decline back from 2014 highs. So obviously I wanted to stay with the direction of this trend, because there's greater probability that market will continue and make another new low rather than turn into a completely opposite direction, because it's not easy to catch a peak low. So I will stay bearish here for Aussie dollar also, because even if you count this decline from 2012 as wave C or wave 3, it's not important. In both cases you need 5 waves down. Here's wave 1, you have wave 2 bounce, then you have wave 3, wave 4 that retrace towards 38.2% exactly, actually, also back into the area of this former wave 4, from where we can see now a very strong reversal to the downside. So actually market made a flat here, expanded flat in a wave 4. Here notice it was a 3 wave move up for a wave A, and probably this decline, 3 wave move down for a wave B to a new low, was most likely the most important lag that kept me on the bearish side of this pair. Okay, so always when you recognize a 3 wave structure, you know that either that's a whole correction or it's part of something bigger, complex correction. In my case, it was obviously part of a complex correction of an expanded flat. So I knew that we should continue to look down after market will make a 5 waves up. Okay, so this 5 waves up was obviously wave C, and what I really like here that despite this very strong recovery, we have even sharper decline. Okay, so obviously these bears are much stronger than previous bullish run. So I will continue to look down now. I see this as a wave 1, first wave with an ongoing 5th wave. Here on the 4-hour chart, we can also count 5 waves down. Waves 1, 2, 3, flat for a wave 4, and now we are in wave 5, maybe also some small ending diagonal here and then a bounce. We are approaching this first level of support at 200%, okay? 200% extension of red wave 1 measured from wave 2, okay? So I project first support at 7137, and then you have a second, maybe even more important level. It's a equality of wave 5 compared to wave 1, which comes in at 7080 or so. Okay, so I would not be surprised to see a bounce here. The market is very low here, so definitely I would not be interested to look for any new opportunities on the downside. Rather wait on a 3-wave bounce back into the area of a former wave 4 before downtrend resumes. Keep in mind that nothing moves in straight line, so I'm expecting definitely a bounce, probably even back to these former wave A highs that can represent a resistance, or maybe these wave 4 swing lows. Okay, so that's for AUD dollar, and now let's take a look on gold, which is falling very sharply. Finally, it looks like that weakness is coming in play after this very strong dollar move. So what I'm looking at now is that market is actually still just in a pullback mode. Here, temporary correction. I identified this breakout point back at start of the year, and definitely it looks to be very sharp, so it's impulsive, which means we will continue to look higher, but after the market will complete a correction. On the daily chart, I recently updated the wave count. What I see here is 5 waves up from the low, which means that market should be, the trend should be changing here. Because always when you can spot 5 waves up from the low or 5 waves up from the highs, you should be aware of possible changes in the trend. Okay, so I think that this can be first wave of a minimum 3-wave rally, maybe even of a big 5-wave bounce, but at the moment that's not important. We need to focus on minimum expectations and go with the wave by the wave, step by step. So what I'm looking at now is tracking a countertrend price action, since we identified, as I said, end of a wave 1 here, first leg, and then you have wave A down, 3 waves down. This was a first correction, then you have a 3 waves up. Notice that market did not make any progression to the upside, any significant move to the upside after we have seen here move to a new swing high. So to me, it looks like that this was just a temporary strength that can be ideally wave B with an ongoing flat correction. So wave A, wave B, and now also notice that this decline is very strong, even accelerating here for the last 2 days. So I think that this can be 5 waves decline underway for wave C, and you know the structure is 335 of a flat correction. So I would be looking for more weakness, definitely expecting a break of 1208 level. Maybe we can see move down towards 38% or 50% of previous 5-wave rise, where I would be looking for a new turn to the upside. Okay, so for now, gold is continuing to weaken as dollar trades to the upside. So maybe short-term traders will focus on more weakness ahead, since I said that we need 5 waves down in wave C before we can continue to turn bullish again. Okay, for now, this is wave 1, wave 2, then you have wave sub-wave 2, 3, okay, and 4, and extended wave 5. So keep in mind that bounce should occur either into wave 4 or maybe into some other corrective waves, but maybe it's a black wave 4 here of a different degree, but in either case I think that any bounce should be corrective and limited, and you should expect more weakness after an ABC rally. So first support that where market could bounce is at this 161.8%. It's actually either level for this wave 3, typical one, measured of wave 1 from wave 2 high. Okay, so be aware of this corrective pre-wave bounce before market continues even lower into wave 5 of C, final leg of this expanded flat correction that I'm tracking. Okay, so for now gold remains bearish as dollar is turning to the upside, but after 5 waves drop we should be aware of a new continuation to the upside. Okay, traders, thank you very much for your attention. I will catch you with our new updates on our website. Have a good day. Bye.